Hey, Red Pepperoni, you're it. Although I don't see you up there, so maybe you stopped out. Um, it is 1:30. Hey, Opa, the Greeka. Upa the Greeka. I don't know. I don't know if you can say that. I don't know if you're allowed to say that. Let me see if I can set this up so I can give you some quotes. There was a bit of a break. Shoot. Now he's going to call me back. I didn't mean to call. All right, let's see. Okay. All right. Here we are. Railtown slightly green with envy. GDC is down 33 cents at 4.17. Finger is up 3.5 cents at $1.21.5. MTEN says $2.64. So they must have done a reverse. Let's look that up. And it's down 74 cents. So they must have done a reverse. Guys. ZJYL 0.1476. Let's look up M10 and see what they tried to do. Mingting International, 275, 1 for 200 reverse stock split. So they has a new CUSIP number, which, if you recall, breathlessly, 3 men told you that was going to make COSM squeeze. But if I bring that up, I'm picking on a dead man. You know, I just got to try to call what I see. And I don't mean to offend anyone, but if you misinterpret my point, all I can do is try to restate it in a way that makes it clear, but I can't make exceptions for, I can't help people's own biases and limitations. So the shares are going to go from 242 million to 1.2 million. Oh. The stock was, it's saying here, par value 0.002. I don't know if that's accurate. I don't know where it traded, but oh, it's not pretty. It's just not pretty. And I hope you're starting to see that when people promise you reverse splits or changing CUSIP numbers, they say that's going to make a squeeze. They either don't know what they're talking about, or they're in on the sting operation. It's only, or they could be in on it by accident. But anyway. All right, let's move on from that. There's no, I'm sorry for people that got buried in MTEN. NextBridge had a filing, and account settings was kind enough to send the link to me. And somebody else did as well. Don't know what's wrong with my eyes. I tried to listen on space calls too this morning. For once, I kept my mouth shut, and I didn't learn anything. I have two questions, or two observations, but they're mostly questions. One is on NextBridge and on MMTLP. Are brokerage firms preventing people from transferring from MMTLP to NextBridge? First question. And the second question I have is, how likely is it that the stock remains non-DTC, non-publicly traded? I think you should hope like heck that it does not trade. Now, there's a lot, I heard some people saying they wanted it to trade. There's split viewpoints. But if it starts trading, that's the solution for Wall Street. If NextBridge starts trading, well, I'll show you here. We'll go through some things. But to my memory, they will have 310 million shares outstanding after this offering, if it's fully subscribed. All of a sudden, there'll be whatever, 2 billion or 3 billion shares trading. They'll just move the whole crap from MMTLP to you and NextBridge, and it's a tragedy. So I hope he does not trade. I hope that, but I don't know the answer. And people want it to trade. I think the same thing will happen like MTEN, just a nightmare. On the other hand, Greg is not going to be fooled by toxic financing. Roth Capital, and a good friend of mine runs the energy department there, which that reminds me, maybe some of you can tell me as we go. I may be able to call him up and ask if he can allocate to me, not for commission, but just my direction, a number of shares that then you guys can pick up. I'm sure Greg will do that maybe via Junk Savvy or Busy Brands, but I may be able to get a block of stock that we can chop up amongst ourselves if you're interested. I think there are some risks in the trade. I just gave you the main one. I hope to hell he never lets it trade. But people out there they can't accept what goes on. It's a nightmare what goes on. I understand it. I mean, it's hard to believe that your institutions are completely ineffective. And I have my ideas about that, but I'm going to just keep them to myself. Just keep them to myself. The great experiment, the baby boomers experiment that started, I don't know, 50 years ago. Too bad you guys are going to live with it. But we can't say anything about it. We're not allowed to say anything about it because it hurts people's feelings. So let's not hurt anybody's feelings. We have to live through it, which I think will be a collapse of our institutions, a collapse of our population, and perhaps a collapse of our society. But let's not hurt anybody's feelings. And who knows? I mean, who knows what happens? Human beings are resourceful and adaptable. So before I get into NextBridge, I just wanted to make a couple of comments, four or five. I don't know that it'll take me that long. I've been working on the gold company that about, I'd say 30 of you are invested in. And I, through 2 Hail Mary passes to one institution, the gentleman who started it, I've had dinner with several times in my travels and in London. He wouldn't remember me from, might remember my white hair and being a sidekick of his friend, but I don't think he'll remember me. And I didn't address it to him. We'll see what happens. I also sent it to a gold company who I met at PDAC in maybe 3 years ago. I don't quite remember. Maybe it was 4 years ago. Anyway, that gold company, the gentleman was talking about how they started out, where they had big gold reserves but no capital. This is years ago, and so he gave me I'd say 40 minutes, maybe 35 minutes after, and we talked. This is a little while ago. And I told him about the sister company and this one, but I don't remember the conversation in detail, other than he said, "Sure, let me know." So we'll see. I'm sure he's busy and he doesn't remember me. That's why I said Hail Mary. I'm going to get it out to another group who I visited when I was in London. There's a gold project just down the highway from the sister company. It's not very big, 500,000 ounces, 1,000,000 ounces, but it's producing, so that's a big deal. But they had a lot of capital. I had to kind of force my way in, pretending I was going in with coffee. But I got in and I met one of the senior people, and we had emails. But again, it's been a while, so I'll get it out. I just got to find the contact details. I'll try to get that out tonight. But they're all Hail Marys in terms of raising money, because typically you've got to build the story. But we'll see. You never know. This is a perfect asset for a public oil and gas company. Gold mining company. To have on its books, because you can talk about it in your presentations. You don't necessarily have to put a lot of money at it. This pilot plan is basically for $3 to $5 million. And once you prove that, over about a 30-day to 90-day period, I looked up my notes and I incorporated the notes in a presentation, but I can tell you I was wrong, and I think I always told you I was wrong in what the pilot plant will produce. But according to my notes, here it is, from now almost 2 years ago. Unbelievable. That's how long this other source of money had to wait for bureaucrats. As far as I know, the money hasn't been released. But anyway, let's leave it there. So the plan is to produce at the pilot plant, once it's up and running, 1.5 tons of this material, this sort of sand clay material, 1.5 tons per hour. And it's not hard to get. It's just all on the surface. Just go up, scoop it, put it on. 1.5 tons per hour, or 36 tons per day. And as the largest shareholder and founder of the company told me, this is an exact quote, once we start weighing the gold, the risk is out of the project. So right now, one of the reasons nobody's hearing about this is he's not telling anybody that the guy that created the technology and is the largest shareholder, he'd like to take over the company, but he doesn't. He's got the most shares, but he doesn't control the company. And so in a way, his interests are slightly different from the company's interests, but he's who agreed the contract that I negotiated, both for you guys and for this other gentleman. So he does have that sort of blocking power, but the key is we've got to maintain control of the company, and then we're exposed to this upside. And it's pretty exciting. It's pretty exciting with gold prices. I didn't realize it, but when we were talking about it, gold prices weren't even $2,000. So everything, it's like when you fill a plane from an economic standpoint. Once you fill a certain number of seats, every other seat is pure profit, and that's the way it is with these gold prices. Every increase just goes right to the bottom line. So anyway, we'll see what happens with that. My goal, while there's snow everywhere, and there is snow here, although it looks like, I wouldn't say it's melting, but it looks manageable out there. I did go out yesterday and it was a slog, but we'll see. I'd like to see if we can raise 25,000 to 200,000. I don't think we have to go all the way up there. But I don't want to show the company $5,000, maybe 25 grand, because everything when I spoke with the company last week, the lease payments and all that come up again in September, I think. That's what he said. I'm trying to remember as I'm saying that to you, it might be August. But anyway, I want to just resolve that issue and gain control, and maybe we'll have time to fund it ourselves. I don't know. Somebody will come in, and it won't be pretty if it comes from the guy who has the technology. It won't be pretty for us. So I'm going to do my best. I do want to talk to you about AI, but we'll do it after. We'll do it after we go over NextBridge. But I don't think it's anything we have to worry about in the short run. But we have to be adaptable to what's coming in AI because it's highly competitive. It is trillion-dollar bets. And it doesn't mean the bets are going to be right. One example, which many of you would understand better than I, but apparently NVIDIA got its start as a GPU company, which is what it does. But that niche, I guess, was for games and beautiful graphics. Well, it ended up dovetailing with the advance in AI and quantum computing and data centers. But when you think about it, IBM particularly, but I guess there were others in the computer landscape, came up with the design or the strategy that you had a central computer, whether it was on site or somewhere, and then everybody in your organization had terminals that had access to that mainframe computer. Well, the PC revolution, which created Microsoft and Apple and Dell and others, Compaq with a Q, Lenovo, and the key thing there was to bring the computer power away from the centralized computer to the desk, or ultimately to the mobile phone or the iPad or whatever. Well, in a way, what AI is doing is moving that model back to a central processing unit, the data center. And everything we're going to have is just a terminal linked to those data centers. Well, I wonder if that is what's going to prevail overall for the long term. I think it'll prevail at the enterprise level, but I'm not sure it'll prevail at the individual user. I don't know, because you can also picture, and this is the point I'm trying to make, Apple computers going a different direction. They've kind of put, with their new chips, the M1, M2, M3, M4, now M5, they no longer use Intel inside, or they don't use that model anymore. And I just got computer upgrades on my, software upgrades on my Apple. I don't have new phone or new iPad, but the graphics are in my phone and in my iPad because of the M1 chips. So there's a potential down the road, at least, a battle of which strategy wins out when you're talking about AI. Right now, everybody's going full bore with the data center model. And to me, the data center model is obviously going to continue because that's where the cloud is. However, maybe it won't be the only alternative. So maybe there'll be a reason to be diversified into Apple at some point in the future. We have to pay attention to all those things. Can't read my own handwriting. I can't read it. So one topic, I just can't read my writing. Let me try it from a different angle. I have no idea. I do want to point out, with gold and silver, particularly silver, there's all sorts of excitement going on in silver now. And unfortunately, we missed the easy entry point. Not all of you, some of you listened to me. But chasing it might be rewarding, but that's a momentum play. And I would expect silver. With this other gentleman, my strategy was, if he put the money up in escrow so that there'd be milestones on the release for the gold company, simultaneously, by placing the same amount of money in silver, he'd be hedged. And right now he would have made 4 times his money in silver. So he'd essentially have the gold company for free. But he was unable to do it because of bureaucratic delays. Those things happen. So I don't think silver is that hedge right now. Silver could go into a period of time where it's volatile, just like Railtown's been, where even though we're making highs, they could crush it down and you could feel sick to your stomach for a few weeks or a few months even. On the other hand, it can keep going. That's the one thing. If the system gets out of control, silver can become unobtainable at any price. So there's a trade-off. But the 2 lessons, one is if you don't own silver, you got to own silver. So it almost doesn't matter what price you pay. But if you already have some, maybe just in your mind or set it aside, have some cash available for the volatility coming in silver. It doesn't look like right now. It looks like, as I projected, it's going to go to 120 and then maybe 150, 160. But when they attack it, and I believe they will, it could pull back 30, 40, 50%. Buy it then. Now we're in that situation. It's not a slam dunk to buy it at any price. If you wait for a devastating pullback where everyone's scared, but you have some cash, you might have another entry point in silver. Now, David Hunter, I haven't listened. As far as I know, he hasn't given any kind of interview that I can follow anyway recently. But last year he was saying, 30 days ago, 40 days ago, 45 days ago, he was saying he thought silver could pull back into the, 30, 28, 30, $32 range. I don't see that. No way in hell. If he's talking about when the market crashes, he thinks the market will crash 80%. I think it'll be 95%. So I guess I always go to more extremes than he does. But I don't think it'll go that far. I think it'll come back to 52, where it broke out, 52 and a half, maybe a little lower, maybe 48, maybe 45. But anyway, that's how I would treat, if you already own silver, I would treat it that way for now. The other thing I want to tell you as you watch silver, and I've been talking to you about it for at least 3 years, 4 years, but I emphasize, I've been at 3 different places and I've lost all track of who, what, when, but I've been talking about silver and studying it for a long time and owning it. One of the things as retail we can do, you study a story, you learn the story, you have all the fundamentals that you can understand, and then you make some projections and you get in early. That's the only thing, that's our only arbitrage is time. Our arbitrage is getting in early. And we're seeing the pain of it in Railtown. But I suppose looking backwards, it's obvious now that Railtown wasn't going to do anything until now. But probably February, maybe March. But I'm not clear that was the only route. They acquired the AIP partners, which according to whale money, the AIP guys are really talented and the Railtown guys don't know what they're doing. I don't agree with that, but that's a message out there. I actually think the AIP guys didn't know how to get approvals quickly. It took a long time. They've never done it before. So anyway, it took a while. But what if during that time frame, and this is, I do think AIP possibly, I'm pretty sure maybe they were the guys that introduced TELUS, which is a big positive. But what if that hadn't ever happened? Well, we wouldn't be in this dead time still. So if the college professor hadn't been running AIP and maybe some go-getter like Rebecca Kurzweil just getting it done, maybe things could have happened much more quickly. So it's easy to look backwards and say, well, obviously. So anyway, we have paid our price in Railtown. We have made our arbitrage. We have, unfortunately, we traded the one thing we can trade that most institutions and most funds, trading funds, are unwilling to do. They need to outperform their peers, and that means no opportunity cost in your investments. So they'd rather have a stock go up and catch it on the way up. The momentum, which is what's happening in silver right now, momentum players. Unless silver goes out of whack, which could happen at any point. My instinct is they're going to control it at least one more time, but who the hell knows? It's a shame to have missed that trade, but the bureaucrats sometimes are slow, and maybe she saved my guy from having to deal with me anyway. Maybe it was a blessing for him, but I think it's a shame. $5 million in silver, I don't know, year and a half, a year and a quarter. Be worth 20, 25 million right now. Maybe 15, depending on where you got in. Be very nice. But wasn't to be. All right, so I told you about that. I do want to talk about Nexbridge. What did I say here to myself? MoMA on Momotion on Tuesday? I have no idea what I wrote. Anyway, let's talk about Nexbridge. But I want to talk about it in a context that I thought silver was the greatest setup, and it's got a long way to go. It's just going to be volatile. So anybody that can't stand Railtown's pain in the assness, they're not going to enjoy silver over the volatility ahead. But I still love silver. Don't get me wrong. I still think it's a must-own asset. But in terms of that timing and the ability to build something, oil and gas is giving that opportunity. And so maybe we can build something there. And now I'm going to transition to Nexbridge and think about Nexbridge in terms of a cycle in oil and gas. It's pretty exciting. But let's go through it. Let's go through. Going live in here, boss. That's my prison guard. No, it's the dry cleaning. All right, let's do those. We'll do those for now. NextBridge might take a little while to go through, so I'll go back to comment. I won't, I'll try to interrupt myself. Here's for fun. A friend of mine had his birthday, so I sent him that. He went to the tip top at the State Department. Acting Secretary of State. Can you believe that? All right, let's see what I have to show you. NextBridge filed an S1. Now, I'll show you, they actually updated that apparently, but the information is basically the same. So it's a registration of securities for sale under the Securities Act of 1933 for NextBridge Hydrocarbon. Now, my lecture always is you've got to move your shares from MMTLP to NextBridge. I think it would be a great help to Greg McCabe to know exactly who his shareholders are, to be able to go to Congress and say, hey, all of our shares are accounted for. Anything else out there is counterfeit. But we've never given him that strength. We've listened to Double D ad infinitum. And I think it's to our great detriment. But I don't know. Maybe the brokerage firms are colluding with each other now, sending out memos to each other, which, and maybe you can't transfer. I can see where individual brokerage firms might run out of shares to transfer, but as a group, my understanding, there's still 50 million plus shares available at the transfer agent to be claimed. And if the system gets NextBridge funded, and a lot of those hedge funds that shorted the stock will be calling Roth Capital with money to close out and manipulate the price, it's going to be dicey. I think Greg's aware of that, and I think my friend is aware of it, but he doesn't really admit it, because who can really admit such a horrible thing? But I think between them, they'll try to protect from a lot of those bad guys. But we don't know. If they get it trading, it's a nightmare. But if they don't, the only way to benefit from the game plan at NextBridge is to own NextBridge shares. And I spoke to Greg around Christmas time, had a nice conversation with him, and he made it very clear to me. If there's any so-called settlement or restitution, it'll be made available across the deck, across everybody. Anyway, let's keep going. This is the red herring. 40 million shares of stock. We have engaged Roth Capital Partners, that's where my friend is, to act as our placement agent. They have to pay 150 grand, which I'm sure Greg is advancing, and then there'll be some fees. Our common stock, they want me back in my cell. Our common stock is not publicly traded and is not eligible for electronic transfer. Thank God. I think that's such a blessing. But you're going to get on the spaces, you're going to get such a, maybe well-meaning, I would submit at least a subset will not be well-meaning, but it's the argument, get it trading. Well, then the slaughter begins. Our common stock is not publicly traded. Leave it that way until he proves up some assets. I think it's great. And it's not eligible for electronic transfer through the DTC book entry system, thank the Lord. There is no established trading market for the shares of common stock, and we do not expect a market to develop. Hallelujah. We do not intend to apply for the listing of our shares of common stock on any national securities exchange or other trading market. Bravo, bravo. But the other side, they'll get it trading. All right, let's go through the company a little bit. We were incorporated in Nevada in the summer of 21 with the name Oilco Holdings, Inc., and changed our name to NextBridge Hydrocarbons, Inc., using new articles, filed June 30, 22. So that's 3.5 years ago. We are an energy company engaged in the acquisition, exploration, exploitation, and or development of oil and natural gas properties in the United States. It's a great place to be over the next cycle. It might be tough for 1.5 years, but over the next 5-10 years, great place to be. Our primary focus was previously the development of interests we held in the Oro Grande Basin. The Oro Grande leases expired as of December 31, 24. That was the campaign of the counterfeiting complex. And then they have minor positions in the Hazel project and in the they don't name it, but they have this. I saw the details of, and I met the geologist, the Oklahoma properties. It's actually interesting, but it's small. Well, actually it could have a lot of oil, but it's small relative to what we're trying to do here. And then they have the Wildcat program in Louisiana. We operate our business through 9 wholly owned subsidiaries. I'm not going to read them. And basically, we have no employees. You see that right here? No employees, which is fine. I think it's fine. No employees right here. We employ consultants as necessary. I think that's terrific. Right here. As of September last year, we had interest in 3 oil and gas projects. The Hazel project in Sterling, Tom Green, and Iron Counties, Texas. The Hunton wells in partnership with Kodiak in central Oklahoma, and the Wildcat projects in Louisiana. We are an emerging growth company as defined by the Securities Act. Now these prospecti or prospectuses or whatever the plural is, these are great sources of true information. And so you should read them. This is over 200 pages long, but you should read it. The key here, since the price of our common stock being offered will be, I'm going to say, instead of is, will be substantially higher than the net tangible book value per share of our common stock, you will suffer immediate and substantial dilution in your tangible book value if you buy this offering, which is fair enough. Now, here's ESG, otherwise known as wokeness. I won't point out that ESG and wokeness followed on in other changes in higher education, journalism, attorneys, government, regulatory environment. I won't point it out. But since roughly the beginning of this decade, and maybe a little earlier, ESG is a massively hindering and slowing and cumbersome burden on the competitiveness of the United States in general, but oil and gas companies specifically. But anyway, I'm sure it's all okay. It's perfectly fine, and I'm not going to comment on it. In 2021, we borrowed $15 million, which we increased to $20 million, pursuant to the terms of the 2021 note offering. As a result of the loan purchase, which is defined many times in this document, in August of 23, Greg McCabe stepped in the place of the lender under the 21 note. Nexbridge's obligations under the note, 21 note, remain unchanged. The note includes a restrictive covenant which restricts our ability to merge or consolidate with another entity unless we, NextBridge, are the surviving entity or the successor assumes all the obligations of that note. And then they go on to talk about the covenants. And the problem with covenants, they are restrictive and they can affect the ongoing ability of the company. In December of 22, we borrowed $2 million pursuant to a 2022 note. And as of September 25, the company had $22.76 million outstanding on the 22 note, which is capped at $25 million. We are not in compliance with the covenants of the 22 note, or if we default under the 22 note, it is possible that Mr. McCabe will not offer to extend any additional loans under the 22 note, which may affect our business as a going concern. That's something that somebody else would want you to focus on, the going concern aspect. I'm not going to bring up his name. He's a great guy and he does great work, and that's all I have to say. The 2022 note includes a restrictive covenant, and it's exactly what I said before about a merger. Our ability to meet these restrictive covenants or to avoid defaults can be affected by events beyond our control. The 22 note provides that our breach or failure to satisfy certain covenants does constitute an event of default. If this happens, Mr. McCabe, as our lender, could declare all amounts outstanding due and payable. So that's something that you're working under. However, I think he's shown his good faith all along. And then they describe the loan agreements a little further, but let's not get buried in it. Okay. Let's see where the stock is while that's downloading. Our stock is basically up half a penny. GDC is down 34 cents. Fingers up 2 cents. Mountain MTEN is down 62 cents. And ZJYL is up a penny as we speak. Okay. Again, they emphasize, that's the thing about these prospectuses. They give you the information in detail. It's repetitive sometimes, but it's your best source in a moment in time. It's your best snapshot of a company. Our shares of stock are not eligible with DTC to trade electronically. You're so lucky. You're so lucky that's the case. If an issue is not DTC eligible, then its capital stock cannot be electronically transferred between brokerage accounts, which means brokerage firms may be unwilling to hold or trade our common stock. So what's in your account right now? Even if it says NextBridge, it's just MMTLP. Get it over to the Xfinity or whatever it's called, Equinity. There's no trading market for our common stock, and none is expected to develop. Thank gosh. Okay, repetitive. We are an energy company. Acquisition, exploration, exploitation of oil and gas properties. Minor interests in Oklahoma and the undeveloped project in Louisiana, and then they have minor interest in the Midland Basin as well. It's all minor until one of these wildcats hits. On our Hazel project is located in Tom Green County and Sterling County, Texas. In August of 2020, our subsidiaries entered into the option agreement with MHP, which I think is McCabe. Let me see if it's up here. I think it's McCabe Holdings. Under which, in exchange for satisfying certain drilling obligation, MHP had the option to purchase the entire Hazel project. It was extended to 21, and then MHP determined not to exercise it. However, MHP is entitled to receive, as recourse for recouping drilling costs, they are entitled to receive revenue from production of the well, one well, attributable to our interest until such time as MHP has recovered its reasonable costs and expenses for drilling, completing and operating the well. This agreement, the option agreement, will continue until such time as that revenue hurdle is met. And then once that's done, any acreage held by production and wells will revert back to one of their subsidiaries listed up here, Torchlight Hazel. They're located in Texas, Midland, Texas. And I have a good reason to go visit Midland. Maybe I can visit Mr. McCabe. So what are the attributes of their business? They don't have any employees, but I think McCabe is a very experienced person. We are focused primarily on oil exploitation projects we may pursue high-risk exploration prospects, which may appear less favored than low-risk exploration. This is very small. My eyes don't match up. It's like I have two different brains, two different eyes. They don't. So every now and then, the mistakes I make are one of sight, not just because I'm terrible at reading things. Other times I'm just terrible at reading things. So this is their business process: evaluate and review opportunities, and then you have to operate, and then you have to keep the books. So what are the Oklahoma properties? They're not much. During the 9 months ended September 30, we produced 58 barrels. That's 9 months of production. But you know what? I've heard of smaller assets in many companies. So it keeps some of the light bulbs on. Net to our interest at $65 a barrel. We produced and sold almost 2,000 MCF of natural gas at $2. So during the year ended 24, we sold a little bit more, but it's not enough. This is very small. Hazel, we received no revenue. There's some production, but after the deducts, there's no ducks left to spread around. All right, legal proceedings. On March 15th, 2024, a securities class action captioned Taggart versus NextBridge Hydrocarbons et al. Was filed in the U.S. District Court for the Eastern District of New York. The action was a putative class of persons or entities who acquired the company's shares in connection with the company's spinoff from Meta Materials. A decision made, by the way, by Meta Materials in December 22. The complaint names as defendants the company and certain current and former officers and directors. The complaint asserts claims under Sections 11 and 15 of the Securities Act, alleging that the Form S-1 that the company filed with the SEC in July of 22, which became effective on November 18th, 22, contained untrue statements or omissions. The complaint seeks, among other things, unspecified statutory and compensatory damages. On August 12, 24, the case was transferred to the Northern District of Texas. On September 9th, 24, plaintiffs filed an amended complaint that added a Section 12A2 claim against the company. On July 3rd, 25, last year, the district court granted defendants' motion to dismiss and dismissed the case with prejudice, which is a great outcome. Final judgment was entered that same day. On July 29, 25, the plaintiffs filed a notice of appeal to appeal to the case to the U.S. Court of Appeals for the Fifth Circuit. The appeal was fully briefed as of December 22nd, 2025. I don't know what the distinction, fully briefed. I don't know what that means. I guess it's still pending. On May 7th, 24, a stockholder derivative petition captioned Bartok versus Greg McCabe et al. Was filed in the District Court of Tarrant County, Texas. The petition names the company as a nominal defendant and asserts breach of fiduciary duty and other assorted claims against current and former officers and directors. of NextBridge and of Metamaterials. The stockholder makes allegations about the defendant's conduct in the company's 22 spinoff from Metamaterials and alleges continuing breaches by failing to correct allegedly misleading statements made in connection with the spinoff. I would suggest to you, everyone, this is being funded by the criminals. At least you can't dismiss it as a possibility out of hand. On November 13, 25, the court issued an order of non-suit without prejudice for the case after the plaintiff filed a notice requesting the same. I think I'm not going to try to interpret that, but I think that stops that case. So overview, on December 22, 22, the company entered into a 22 note with Mr. McCabe, 20 million, and it's been amended for 25 million as of January 26 this year. The company was entitled to request advances under the note at 100,000 each minimum. And it goes through how it's been distributed. Mr. McCabe is the largest shareholder of our common stock. As such, the 22 note and the note dated January 24 are related party transactions. Again, thank God. We amended the note on August 7th of 23. McCabe purchased all the debt from Metamaterials and stepped in their place. The company and McCabe have entered into an amendment to the 22 note to provide for automatic extension on a quarterly basis. The current maturity date is March 31, 26, this quarter. An amendment to the 21 note also includes an automated extension provision and currently is extended to March 31 of 26. I understand that it'll just keep rolling every quarter. Results of operations suck, basically. The sales barrel of oil equivalent 683 in 2024. They had a net loss in 24 of 59,614,000. And current liabilities of 52 million, stockholders deficit of 52 million. For the year ended December 31, 2024, we had production revenue of $12,585. Believe it or not, that was down from the year prior. Roughly $1,000 a month. We recorded depreciation, depletion, and amortization. Very unimpressive. I don't know which statement this is. I assume it was the income statement. But that's life in the fast lane. That is life in the fast lane. Let me go through these and then I'll go to your comments and then I'll come back to the rest of it. Fingers up a penny and a half at 119.5. Okay. I guess this is the next one. So for the year, these were the expenses for the year. I forget what this chart was. Our general administrative expense for 24 was 4 million versus 12 million the year before. So that's actually pretty good. But, you know, they don't have any employees anymore. So our cash flows, 24 versus 23, we had a net loss in 23 of 10 million and a net loss of 60 million. In the year of 24. I don't know where it came from. I guess it's an impairment against the assets. You can look these up later at your leisure. This is the note, the interest, capitalized interest on their note. As of December 31, 2024, we had cash and cash equivalents of 200 grand. They used cash in investing opportunities, activities, 24 of 700,000 compared to almost 9 million the year before. Related party loans. And you can see adjustments to their net losses there, but you can look it up later. Here's part of that chart. The net loss for through September of 25, 8,900,000. Net cash from used in operating activities, 500,000. Net cash from financing, 5 million. And cash at the beginning of the period, 191,000. Cash paid in interest, 400,000. Cash flow provided by used in operating activities for the 9 months ended September 30, 2025 was $535,000 compared to 5 million for the 9 months ended 24. Cash flows used in operating activities for the 9 months in 25 can be primarily attributed to the net loss from operations, an impairment adjustment, and changes in accrued liabilities. And they bring up the 5 million they borrowed. Capital expenditure table. I'm going to skip over it. Okay. On August 7th, 23, McCabe and Meta entered into a loan sale agreement whereby Mr. McCabe purchased from Meta the 21 note and all outstanding loans made to the company by Meta pursuant to the loan agreement, which they call the loan purchase. As a result of the loan purchase, Mr. McCabe replaced Meta as the lender and secured party under the 21 note and the loan agreement. As part of the loan purchase, Meta assigned to Mr. McCabe its lien on 25% of the Oro Grande prospect. The company's obligations and responsibilities under the note remain unchanged. On October 1, 23, we entered into amendment on the 21 note with Mr. McCabe, extending the security date. It now has automatic extension provisions, and the current due date is March 31, 26. The 21 note is fully drawn with a principal balance outstanding of $15 million. It bears an interest of 8% per annum, computed on the basis of a 360-day year. And it matures on January 3rd, 24. If in an event of default, interest on the 21 note may accrue at the default rate of 12% per annum. Additionally, we have an aggregate principal balance of $6.59 million outstanding under the loan agreement, which bears an interest rate at 8%. Default 12%. The combined balance on the 21 note and the loan agreement as of September 30, 25 was $21.22 million. The combined total accrued and unpaid interest was $6 million. It's a lot of quid. On the December 22, we issued an unsecured promissory note in the amount of $20 million in favorable of Mr. McCabe, 5% per annum. And they increased that for borrowing up to $425 million. Wow. As of September, the company had a balance of $23 million and accrued unpaid interest of $3 million under the 22 note. Automatic extension provisions currently maturing March 31, 26. As of September 30, 25, notes payable total $43.98 million, and additional borrowing and adjustment totaling $1.23 million, and $215 was advanced to Mr. McCabe for settlement of an account payable. There's a Capco note. I don't want to get buried in it. February of 2024, Capco, a Texas corporation, loaned $2 million at 12%. 1 year maturity with an option to extend. If we extend the loan for 1 year, we must pay all accrued interest for the first year. And thereafter, the loan will bear an interest rate that is mutually agreeable, not to exceed 18%. As part of the transaction, Greg McCabe entered into a stock pledge and security agreement with Capco, under which he pledged $250,000 of his shares of common stock in Nexbridge to secure our obligations with Capco. Further, Mr. McCabe entered into a subordination agreement with Capco and with the company, under which Mr. McCabe agreed to subordinate his debt to the Capco note. Accrued and unpaid interest, basically $250,000. As of September 30, 2025, we had $700,000 of liquidity, cash and cash equivalents. That's gone down. Our short and long-term capital requirements are funding the development and drilling activities and paying our contractual agreements. All right. Let me go to your comments and then I'll come back. I skyrocket at night. Hi, Peter. No trust, no believe. No woman, no cry. No woman, no cry. Oh, I remember. Pete, the Greek. We're going to get paid, William. MMTLP. Well, I hope you're right. James Fisher. Whatever happened to him? I don't get a chance to watch anymore. I've not heard nothing from him or seen him on your show. I haven't heard from God myself. There's this great silence. But still, you have to have faith. Silver, thank you. I'm so glad. I told my guy about it at 20, 25, 30, 35, back to 30, back to 25. I'm not sure he liked it because it was so small. Maybe he'll like it now that the market, the size of the market has quintupled. But I think they're going to let the steam run out of it and then drive it back down. But we'll see. We'll see. Look, once you break out of all-time highs, the computers take over, and everybody's talking about it. So everyone rushes in, just like they do with everything, and that's it. Gold 5100. Somebody come fund our gold company. Well, you don't want. Let me just tell you, there is a guy, and either he is worth or his company is worth something like $450 million. And that guy's willing to take over our company and fund everything. And he'll do it in conjunction with the guy who founded the company. I'm sure they'll have a side agreement. And we'll still be at risk, although I suppose as long as we don't convert our note, we'll at least get our money back. However, that's all depends on how they write the documents, and I don't think we have I think we've got pretty good attorney out of either Vancouver or breaking news, silver should be trading at half its price later in the year. I don't know about that, but it could happen. I don't know about the should be. That's what I meant. Giants to sign Harrison Bader. I saw that the Mets signed somebody, but I don't see it. My head is pounding. Trump dumps Kristi Noem as he orders long-term rival to lead ICE. Seems misogynistic. Anyway, Joe Marty, you do not want just anybody to fund it. The deal, I think, that guy will offer might be as simple as his previous deal. And most of the investors in this company are all well into their 80s. They're all wealthy, but understandably, they have a different outlook on life than they did 15 years ago, 20 years ago. So they may go along with it. And the proposal was he would buy the company in return for paying all obligations and fully funding the pilot plant. That would be an investment probably of about $4 to $5 million, but it's not all. It would all depend on what deal he made with the other guy, but something like that. He'd just buy it all for that, and then if everything worked, he would pay us 20 cents a share, which would be about, it's a lot of money. It's not an insignificant amount of money. And we'd get paid out of proceeds, so it wouldn't come out of his pocket. It would come out of a deal to sell the company or out of production payments. But that would be equivalent to about $100 million, maybe $125 million. So it's not nothing. But currently, look, it's an on-off switch. All of the years of testing have led up to this moment. And the tests that are done, and my understanding is hundreds, if not thousands of tests, but it's certainly hundreds of tests, paid for by this wealthy gentleman who owns the largest position over the last few years, have proven up two processes, both of which increase the grade from essentially 0.04 ounces per ton recovery to as high as 0.25 ounces of gold recovered per ton in hand. That's a lot of gold. So the current grade to 200 feet is 6.6 million ounces. And if we assume $2,000 cost, which is actually too high, that gives a $20 billion that's at the current grade. That gives a $20 billion target profit over time. If somebody buys the company, they'll pay a discount to that, or maybe not. Or if they JV, they won't. Or if the company decides to go it alone, there will be some cost to financing. And I think I can get a financing package. I have the promise, if a white paper is developed, I have the promise to look at it for one of the best investors in the world. But we'll see. If they take that down to 400 feet, they know that it's the same. I mean, nothing is fully known until you actually do it. But they have drilled down to 400 feet, and everything was the same. So if they prove that up, you've got 40 billion. That's using the grade of 0.04 ounces of gold recovered per ton. If you assume that the two new methodologies in fact do work at the pilot scale, and I hammered the guy. I said, come on, are you going to be able to get this done? Blah, 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 blah. And the basic answer was this. Basic answer. The last time they had a process, it was based on, is the word valences? I don't know. That's in my head from chemistry class, but I don't know. It was chemistry. It was based on attractions, positive and negative attraction. And this gold is really tiny. You have to pull it into solution, and then you have to get it out by charges, what I'm talking about here, or magnetism. And so you get it out, and they were successful doing that. They'd get it out into solution, and then it all go right back in when they back into the little clumps when they scaled up to the pilot plant, because they couldn't get around the pilot plant sits on the earth. They just couldn't get around it. I mean, to me, I would try putting a big rubber base, but I'm sure they thought of that. They just couldn't get around that. So it was back to the drawing board. And over the last 4-6 years, there's some interruptions, you know, as we've described before. But it's physics now. This is how it's explained to me. So it's not about the negative and positive charges anymore. And I know a little bit more, but I'm not going to go further because I think I would be violating, I don't think I'm allowed to say, so I won't. But the scaling up should be without a hitch. Yet, until you do it, you never know. So if they scale up, which is the whole point of this pilot plant, and they did raise $1 million, so they have moved forward. My understanding is they've made progress, and I think we're running out of time, frankly. So if they use the new, if that you take the grade from 0.04 to over 0.20 per ton, just on the area that's been third-party tested, you go to profits of 100 billion over time. And that's different than what people would pay for it, you know, but you got to start somewhere. And then if you take that down to 400 feet, that's 200 billion. And I'm not saying this is guaranteed, by the way. You have to go through the step of building the pilot plant and weighing the gold. But as the gentleman who started the company says, once you do that, the risk is out of the project. Anybody can sit down. Your 5-year-old daughter could sit down with a calculator and multiply $3,000 in this case down here by 66 million ounces. It's arithmetic. All right, we proved it down to 400. We're recovering this 66 million ounces times, and hey presto, it's a lot of money. So people are going to come after it. It's not out there known yet, but it will be. And, you know, just like with silver, just like with anything, just because I'm involved in it, we'll miss out. That's how I start feeling in my life. Now, let me just add one more number there. Add one more number. I'm not going to break it out into its parts. And this is the blue sky, and I wouldn't count on ever seeing it in our lifetime because the project will be sold by then. But if they prove up all of the lease to all depths and to eastward and westward and in between, you could have $600 billion. $600 billion. Now, why do I show you all that? If this gentleman has his way, he's going to pay 20 cents a share. And it won't come from his money. It'll come from the flows, somebody buying the company, or the sale of gold. He won't put it up. He'll just cap us out. All he's going to put up is roughly $4 or $5 million. But he'll have a side deal, and that's the part, I don't know. There'll be something going to the guy that has the technology. Right now, that's not the case. Right now, that guy is pari passu with our investment and with the potential investment. So anyway, it's 20 cents times, we would have about I don't know. I really don't know. 550 million shares outstanding. So he'd pay about 110 million. He'd pay about 110 million out of proceeds to get these kind of numbers over time. So we don't want just any funding. What I'd love it if my guy got his money and he could do this, because he deserves it. He negotiated the transaction and put himself on the line. It's not his fault that it's taken so long. But what I'd like to do, Joe Marty, is maybe we can raise some money, and then if Railtown goes up, we can put some money in escrow and we can fund it ourselves. But that's in the good Lord's hands. Hothead. Sounds like me, hothead. Good afternoon. Good afternoon. Hey, Fast Eddie. How are you? Pete the Greek. Please explain this S1. Lots of conflicting messages. Tell me some of the conflicting messages. I've got more to show you, and the reason I'm showing you, it's like 250 pages, 261 pages, a lot of addendums. But S1s and red herrings, as we used to call them, prospectuses, they have so much information. And you just have to force yourself to read it. And they repeat, it's repetitive, but by the time you're done, you learn something. I don't know what the conflicting messages would be. that you're getting. Assuming he doesn't go public or doesn't get the ability to be housed at the DTC, I think that's the best situation for us. Now, if he raises I really don't know. If he were to raise money at $1 a share, which I can't tell you right now because I don't have a way to talk to. I guess I could call him if he shared the information, but I haven't heard anything, and there's no reason I would, about what the indications of interest are. I mean, it might end up being at 25 cents a share, but let's just, for ease of numbers, say that they raise money at $1 a share for the full amount, 40 million shares. Well, you don't have much of a company. If Greg decided to pay off all debt, you don't have much. But luckily, I don't think Greg is that kind of CEO. I think he's shown that he's going to stand with shareholders and do it in a way that wins for everybody. So that's one observation I have. The company's not much. But you got to start somewhere, you know. The Wright brothers started with an idea, you know, so you got to start somewhere. Trying to think what would be conflicting. It looks like they're going to raise the money. It looks like the company has no intention of asking the DTC to make its stock trade. So that's good. I would imagine once they get up and running that Greg has several possible deals in mind to change the story. And I called him on a cash flowing deal. I don't know if it's late in the game. I don't know. He said it's really not what they're trying to do right now, but he has to see it. So we'll see. Basically, an idea of adding 100 million barrels to his potential asset base, which could be proved up very quickly. And we'll see. I haven't gotten it out to him. I have a list. I fell behind this week, and I'm gonna try to get it out today or tomorrow. I didn't know this was coming, so I thought I had more time. But my point is, he can build a company once he's got shares to use as currency, and once he has deal flow, and he has his own money. So I think we're in a good position. If they get the stock trading, you're just in a hell. You're in living hell. They will crush that stock. If he ever needs to raise money, he'll do it at 10 cents a share, 5 cents a share. I don't think he'll do toxic financing. It'll just be the hell you've gone through before with other companies. So one would hope that it doesn't trade. Now, the DDs of the world and the bankers of the world, the criminals, they're going to try to make it trade. I bet FINRA tries to make it trade. I bet the SEC tries to make it trade. So then you're going to be in a race with, you know, maybe one of these wildcat wells works. And to our interest, which other people's money is drilling, to our interest, it can be calculated that the present value of future revenue streams from that well might be $1.50 a share. Well, that's brilliant. That's brilliant. Then the criminals will try to destroy it because they'll and they're going to do it anyway. They're going to from Germany, they'll get it to trade in Chicago. But if there is provable by reserve reports, there you can show net of debt, net of everything, just from one well, there's $1 a share in asset value. Well, then there you have something to work with. And by the way, I say $1, it could be $5, it could be $10. These Vermilion Parish wells, Southern Louisiana wells, they can change your whole story overnight, particularly if you're in the middle of a trend. And I don't know that you can call them trends. My memory of them is they're salt domes. But these salt domes, if you find one and there's gas trapped there and oil, there's faulting all around. If you think of a big blob of a layer of salt being deposited flat and then the world being deposited on top of it, but then the weight and there's a crack, the salt starts lifting like a blob and it goes up and it's got buoyancy. It's got water in it and it goes cracking through these upper layers. And as it's sitting there, there'll be oil and gas on the top, maybe, depending if it's trapped. But all the horizontal layers, the sandstones and the what other else rock there is, the carbonates, they will bend up a bit, they'll fracture, but the oil and gas reserves will try to escape northward, but they'll run up against the impermeable blob of salt. So if you drill down in one of these, you get this great reservoir, but it's usually a fault block. And it's big, but it implies, well, there might be more deeper, number one, but it also implies in the adjacent fault blocks, there might be something. So it's very exciting. So one well establishes it, but you might have 5, 10, 15 wells to drill around that salt dome. Anyway, if you think of the big structures offshore that have made British Petroleum and Contango Oil and Gas and made huge companies offshore Gulf of, I guess, Gulf of America, Gulf of Mexico. When you come onshore, there's no difference in the targets. I mean, I suppose they are younger. I suppose you can think, I'd have to talk to an oil man or girl whether or not they've been more thoroughly drilled, but I don't think they have been drilled deeper, but who knows? But it's the same story. Below the surface, the targets are the same as they are out in the Gulf. They're maybe deeper in the Gulf in some cases, but the depositing happened when the dinosaurs were around. And so it's harder to put seismic chutes together on land. It's easier maybe in the marshes, but on land you got a lot of landowner, farmers, towns, whatever. And you got noise, you got trucks and maybe other things going on the surface. And then right at the shoreline, you've got the waves making noise. So when you go offshore, it's easier to run a seismic study. But that doesn't mean there's not oil and gas deep in these plays. And it would be exciting to talk to Greg or see a presentation on them. The first target didn't work. It was not commercial. Of course, that doesn't condemn the whole salt dome, but maybe it did. Who knows? I don't know. I don't know the drilling program. But they can, one well can change the Nexbridge story dramatically. And then it won't matter what the criminals do so much, because the company will be priced on some discount probably to the per share value, but not much, because that's already discounted future cash flows. And as new wells are drilled, the price goes up, and the shorts, it's more than just shorting, but the complex of heaviness can't destroy the stock. So that's the good news. I don't know what else would be conflicting there. I think they're going to raise money, which I think is great if they stay non-trading. I think everybody should be scrambling to move their shares to equity. And if your broker plays dumb, ask to speak to the manager. And if she gives you a hard time, ask to speak to the regional vice president. If she gives you a hard time, you know what, just do it. Be polite, but follow everything. Keep a record, follow it up with emails, put it in writing. If they tell you they're not going to transfer your shares, put it in writing. At least there'll be an email timestamp, or if you mail it, there'll be a postage date that gets you in line in your claims. There's two ways to get paid your investment in Nexbridge. One is that somehow Congress grows a pair, or the SEC or FINRA cares, which I can tell you they don't. They're owned by Goldman Sachs. They're owned by Stevie Cohen. They're owned by Ken Griffin. And the attorneys, they're all owned by who pays money. Attorneys don't give a crap about right and wrong. It's just money. So the money is on the side of the criminals. You need to change policy. You're never going to get policy changed, ever, until the whole thing collapses. The system has created a fractional reserve security system as an analog to the fractional reserve banking system. This is what I've been arguing for years now. That's what I think. And so everything's out there leveraged to the hilt, and they can't afford it to go down. Your bank accounts are leveraged to the hilt. We haven't had a bank run because of the FDIC in years, but there can be a bank run, which is why you want to own gold and silver or any hard asset. But anyway, I don't know what the conflicting things would be. I'll go through the rest of the S1 here in a minute after I get through these points. GDC is only down a penny now, 449. Finger is up 1.5 at 119.5. MTEN is down 94 cents. We're gonna change the name. We're gonna change the CUSIP. It's gonna squeeze. Come on, guys, don't listen to that anymore. Just gives them more to steal. Account setting says the S1 clearly states that Nexbridge will not trade. Yeah, but I will submit to you that they don't have all the say so. Your buddy Double D and his minions have argued that it should trade, and then the attorneys, I don't know if they work with him or not, but attorneys are going to argue, and they have argued, that because Greg does something I think is mighty good of him, He follows SEC reporting. Well, the attorneys twist that around. Well, if he's reporting SEC reporting company, then he's a publicly traded company. And of course, it never was meant to be a publicly trading company. It was the criminals that fraudulently got that going. So he's doing it to stay in compliance with all the crap that the criminals and their attorneys get directed his way. He's a fighter. All right, let's keep going. Pat M. William and all. How are you, Pat? Marty Party says that rail engine news out. Ward's train has arrived. What's the news? What's the news? Start spreading the news. I'm leaving today. I've got to make a brand new start of it. One hour ago, is this the news we were waiting for? Railtown AI Technologies launches Rail Engine, a real-time event-based ingestion engine to power next-generation AI agents. 1 hour ago. It wasn't there when I started, but I was there when it happened. So the news they put out that I read to you in their filing said by the end of January, which is where we are, isn't it? It's where we are. All right, I'm going to take a quick break because we've got a lot to talk about. Let me see if I can play something for you. I just want to get something to eat because I'm running out of energy. Dollar collapsing. Guys, this is all the argument of the metals, and I agree with it, but don't believe that the banks won't fight back. They've got the U.S. military, they've got the government, they've got the Fed, they've got the plunge protection team. I don't know. I just don't know. That's the problem. At 20 bucks, silver was a screaming buy. At 120, in the short run, it can go down by 50%. So it's just not an effective hedge. It's volatile. Let me see. Jeremy Grantham, by the way, says AI is definitely going to end in a bust. I don't know. It'll correct. The multiples will come down. This guy Sasha says AI companies have run out of money. I see. There's a conflicting thing because the cash flows out of these hyperscalers are ginormous. They can't be running out of money, but maybe they've bit off more they can chew. That's possible. But let me play this. Let me play this for you while I take a quick break.
You know, everyone's talking about NVIDIA and cloud AI data centers or token factories, assuming that's the model that we're going to be using in the future. In fact, the CEO of Microsoft was at Davos telling governments that AI would eventually become a public utility that was connected to the grid and the communications network.
A long-term scalable solution is to have all of these token factories, part of the real economy, connected to the grid.
He's effectively promising that AI will always be delivered as a cloud service, which is, of course, conveniently integrated with Microsoft's cloud infrastructure. But I think he's wrong, and that won't be the model that ends up winning. In my view, the real AI race is being won by Apple, and almost nobody is paying attention. Let's forget the hype about models for a second. AI is mostly just mathematics. Matrix multiplication, vector operations, linear algebra, billions of calculations per second. CPUs are terrible at this. They're built for logic, not repetition. And most computers today ship without dedicated GPUs. That's a decision that Intel made years ago when they dominated the PC industry. They bet on integrated graphics, which is a half-assed approach that they thought would be good enough for most users. They let the discrete graphics market become someone else's opportunity, and that someone became NVIDIA. For years, NVIDIA made GPUs for gamers. It was a niche market that Intel didn't care about. But then deep learning arrived, and suddenly those gaming chips turned out to be exactly what AI needed. Thousands of tiny cores doing the same calculation simultaneously. NVIDIA's side business became the backbone of the entire AI industry. And today, they're the world's most valuable company. Meanwhile, Intel is fading away like IBM and other giants of that era. Now, GPUs are great, but the problem with them is that programming them is a nightmare. It's not just the hardware, it's the drivers and the language. Everything about dealing with GPUs was difficult. So Apple said, let's scrap all that. We've got a better idea. About a decade ago, Apple made a decision that at the time seemed crazy. They decided to abandon Intel, the giant of the chip industry, and go their own way. It was audacious because Intel had dominated the semiconductor industry for decades, and they were the undisputed leader in chip design and manufacturing. But by 2020, the first Apple M1 chips arrived, and they were an instant hit. Laptops ran significantly faster and had dramatically better battery life, and everyone was stunned. The secret was a completely different chip architecture. You see, Apple put the CPU, GPU, and neural engine all on the one chip and shared the same unified memory pool. There was no copying data between processors and no bottlenecks moving around information, which meant they could send GPU-intensive jobs to the GPU and send CPU-intensive jobs to the CPU, and then use neural engine to pick up the slack for matrix multiplication. So when large language models exploded, the Apple ecosystem was already ready. Developers like me could just start coding directly into the GPU. And now AI tools like Claude have made GPU programming dramatically easier. I remember a few years ago when I started developing the Kira algorithm, just how hard it was to get GPU programming right. And that's because it works in a completely different way to what most people are familiar with. Instead of feeding it instructions one at a time, with GPU programming, you need to load all the data into a buffer, prepare a command, and then execute it all at once, and then decode the output. This makes it very hard to get right, and it would often take me days just to debug a simple crash. But with tools like Claude, if you know what you're doing and you precisely describe what you want, you can iterate really quickly. Now, it's still not perfect, but AI coding makes GPU processing so much easier. So this means that the Apple ecosystem has a huge structural advantage for insanely fast, insanely cheap matrix multiplication. And guess what? Matrix multiplication is the very heart of AI. So when Satya Nadella talks about these giant publicly funded AI token factories that he wants governments to build, I think he's dead wrong, because the unit economics simply doesn't stack up. If you can run matrix operations effectively locally on your device, you don't need the cloud. You don't need to be paying for these massive GPU clusters that burn cash and electricity and move data backwards and forwards all the time. You use the AI right there on the device that you're using. Whether it's a phone, a watch, a tablet, or a laptop, it's about as efficient as you possibly get because the cost and latency are almost zero. Microsoft has gone in on a model that, to be honest, doesn't make sense. Mac OS is winning in AI because Apple removed the friction between CPU, GPU, and the neural engine. And for developers like me, building an application with AI baked in has become remarkably straightforward. Apple's core machine learning framework is natively integrated into the hardware and the operating system, and this dramatically cuts development and testing time. Meanwhile, Windows is still betting for a world where GPUs live in data centers, and they're stuck in that model because of the relationship they've had with Intel all these years. And that's why Intel and Microsoft are in such big trouble. But of course, if you listen to social media, you'd think that Apple has lost the AI race. And to be fair, Siri is a huge disappointment. And Apple Intelligence, well, I'm not even sure what to make of that. But I still believe that Apple will ultimately be the real winner of AI, not because of the models, but because of the chips. You know, there's nothing magical about AI. If you strip away the hype, it's just an advanced programming technique that allows developers to solve old problems in new ways. Now, large language models get all the attention, but these models are just software, and software relies on hardware to run. The closer the hardware is to the user, the faster, more private and secure the experience becomes. Apple understood this long before anyone else. So the M-series chips turned every Mac into a serious AI machine before most people even realized that it mattered. And while big tech was focused on who had the biggest data center, Apple quietly put an AI engine in every laptop and every device. There's now hundreds of millions of devices all around the world capable of running AI locally. And that's how Apple wins at AI. Apple wins not by depriving communities of electricity and water, but by turning the devices that you already hold into powerful matrix multiplication engines. If you enjoyed these videos, please consider subscribing to my channel for a very contrarian view of the tech world.
All right, let's go back to Railtown. Thank you. I needed something because I was running out of juice. They changed everything in the software, so I don't know how to really use anything anymore. But I guess it's better. I guess it's an improvement. Well, it's too bad. Another idea I didn't get a chance to invest in, adding to Railtown, but that's all right. Luckily, you guys did. Luckily, you guys did. And that makes me happy. Now, that what I just played for you, I don't think that's a threat to us in the short run at all. And it may not be any threat to Railtown. But I will try to get a bit of an answer on that. But what I think the implication is, if Railtown gets purchased by, let's say, Microsoft, maybe we shouldn't stay all in Microsoft. Maybe we should, that word, diversify and get into Apple. But it's different when you have a substantial account. Then, of course, diversity. Okay, let's get this. Trying to see if I can play this for you. I mean, show it to you. All right, let's see. That's great news. Who told me? Joe Marty Party told me. That's great catch. That is a great catch. We got 40 minutes to go. Darn it. They signed me out. I didn't sign out. Darn it. Okay. Of course, they're going to try to sell it off at first, but I don't think it's going to work. GTII is trading at 0.0182. Got that going for you. The Dow is up to almost 50,000. My projection on the Dow was 55,000. Now I have it at 70,000. S&P is almost 7,000. My projection was 7,500. I now have it at 10,000. Ooh. Ooh. Okay, Railtown 2534. Probably the last time you see. And I hope Brandon gets his friend to buy it back, but he won't. 169,000 shares, 2547, 2549. Are you out of your mind? Last trade, 250 shares. So the question is, Joe Marty, is this news enough to break the backlog of buying? I don't think so. I think it's the start. I don't think it's enough. But we'll find out. Certainly a step in the right direction. Mike, news on Railtown, yay. Mike, news on Railtown, yay. Akira Nova. Jeremy Simmons, somebody bought 72,000 shares. Wow. That's a big schmacker. Well, I guess it's in the volume. There's 169,000 shares total, so yeah, I guess it could be in there. I don't see the trade, but I don't have that deep of a service. That's possibly somebody day trading saying, uh-oh, get me out of here. Julie Kim, news has been released by Railtown. Richard K., which will provide a return on investment first? Nexbridge or Railtown? Railtown will. Railtown will. Nexbridge is still, and we'll go through it, but the criminals, if I can just call that whole complex criminal, they chased away all the employees by threats. Threats to people's lives and health. They chased away the Oro Grande leases, same way. And they're not finished. They're gonna continue. But assuming, as long as he raises money and does not trade, which would be perfect, you could get a rate of return in Railtown. I don't know what you paid for it. In my case, I paid $8 and it's $7.96 or something, $7.98. That's going to have to be a hell of a well for me to get a return on my investment. I think most people here with Railtown have paid somewhere on average between 35 and 40 cents a share, maybe up to 45 cents a share. But I think most people are in that, 30, 35, 40 cent range. Most people. That could happen in a day. I think Nexbridge he has a great strategy. and he's going to be opportunistic, and he has deal flow. And my friend who runs Roth Capitals, you can look it up. His name's Alex Montano. He's very good too. He's been doing this. You know, I went to his wedding years ago, and I met him. He kind of cold called me in London when I was working there with my guys. I must have shaken his hand at some dinner or something. But anyway, it's been years. We've known each other a long, long time. And I think that guy will bring a lot of deal flow to NextBridge. So I think if you own the NextBridge shares and they don't trade, I think you're about to see some good things. But it could take 5 years, and it'll be worth the wait. It'll be worth the wait. On the other hand, any one of these high upside wells, if they hit, the stock could be $2 or $3, could be $5. Just don't know. I don't know the details of the target, but if you go down 25,000 feet, 30,000 feet, I don't think you can go much deeper for natural gas. I don't think. But if you go down there, maybe a little bit further, maybe 40,000 feet. But if you go down there and you find 5 TCF on one side or one fault zone on a salt dome, if that's their target, I assume it is, man, that could set up on the other flanks around, it could set up conceivably 20 trillion cubic feet. I'm dreaming here, of course. But if you have an interest in that 10% and other people are drilling it, wow. 10% of 10 trillion cubic feet is a trillion cubic feet. I don't know what natural gas is worth in the ground anymore, but I would guess it's at least 50 cents. It's probably $1, but it's at least 50 cents in the ground. It's $500 billion divided by, I don't know, 500 million shares outstanding. That's a huge upside. One of these wells could dramatically change the dynamics of NextBridge. But they're high risk. I mean, I would put them at, if I were risking it, let's say I just gave you a scenario, which I have no idea if this is the upside target, but I gave you a scenario of 10 trillion as the target. I would risk it at 7%. I would say that it's less than a TCF that you're going to hit. So it's much lower numbers. The risk is, these are wildcat wells. They're high risk. But you know what? He's not putting up any more money. It's other people's money drilling. Pilot to the moon. How are you? Ward Richardson, there he is, the man of the hour. Ward Richardson is the man of the day because his call on Rail Engine came to fruition. Good afternoon, Ward says, William and RT crew. I see the cattle cars have left the station. Buy all you can. Now, let me tell you that. I agree with Ward on that. There may be a lag in the stock going up. I can think of 2 reasons. And they work together. One is the criminals are going to keep pressure on. Secondly, this may not be the buyout or the full disclosure that allows buying to come in. But I think by the end of the day, this is going to be 30 cents. Damn it. I wanted to try to sell some things and buy some more, but that's all right. I'm happy that all of you guys have it. I really am. So Ward is correct. If you see this be slow at first, do not hesitate. It is possible we have another week or 2 or 3 or 4 before whatever news is blocking everything actually gets released. But for Railtown to put out this news, I would point out to you one observation: research. Research. I'd put that observation out. Research. That's one observation I'd put out. So the best time to buy is in the lull after good news. You've never experienced good news making a stock go up. You're going to see it in Railtown. Before I erase this on the gold company, all this upside, it's huge upside. Let me just make one more comment on this gold company's upside, because I'm going to probably erase this. This kind of upside, a major or a intermediate sized gold company, or even a small one that's cash flowing, they could buy the company or JV just to put it on the shelf, just to put it on their presentations. This has value once it becomes clear, even if it's not fully formed out. All right, so Ward Richardson says, buy all you can. And I endorse his opinion. Hi, Alan Weiss. I think James, Ham, not him. I don't know where Ham is. Ham's lives up in and around New York City. And wow. I think it's been almost a year. I wouldn't say a year. I would say 10 months since he's talked with me, 10 months. But I seem to have that effect on people. So I assume it's my fault, not his. But no, Ham hasn't come on. He went with, I think our messages a year ago on trading finger diverged, I think, but I don't know. The answer is I don't know. Totally out of the blue. And all right, 750 shares just went off at 25 too. to 11 minutes to go. Donna says, hello, William and everyone. Railtown volume is up today. Yeah, yes. Oops, I'm not looking at the volume. The volume is 180,000. I don't know if there's more. That's in the US. It's probably higher up in Canada. They're what do you guys call it? Bar charting? Bell charting? Supermarket charting? When it just goes back and forth on the bid. There's a name for it. Barcoding? I don't know what you call it. Ward Richardson. Hello, Donna. I hear it's a little chilly down there. Well, she deserves it because we're up here freezing, and she went down for the hot weather. All right, the ask is about to permanently leave the 25-cent range, I think. Oh, well. Steve, Uncle Bill, I have a 401k. Won't let me transfer any money to a self-directed unless it's in the fund for 90 days. It's in their stable fund, which doesn't count. Is there anything I can do? Oh, no. What did I do? Babies in black. And I'm feeling blue. I said, oh, I don't know what you can do. You can borrow against it. You can take out a personal loan against your 401k. I don't know how long it takes. And it'll be a low interest rate, like 6%, 5%. And when you get that money, you can put it in your other account. And then when it's in your other account, if you've bought the stock and the stock is up, you could sell the stock in your other account enough to pay back the loan in your 401k. That might be something to do. It might be complicated. But at this point, the only thing that's going to cause this to stay low is if TELUS or whoever, see, I don't know what the news blockage is, but whoever needs to announce, if that's a month from now, this will be up and it'll drift back down because the heaviness will not disappear. They'll keep pushing it. They're going to step away right now and see if this causes any buying. But as soon as they determine that people ran out, they'll just keep pressing it. But I would give that scenario maybe 40% odds right now. Look at it this way. As soon as research comes out, you can go listen to Tony for all the news you need because he can read a research report. You won't need me anymore. And as soon as whatever is blocking, whatever the blockage is removed, give it, I don't know, give it 72 hours for investment committees, maybe a week for investment committees to meet, discuss, and maybe start buying. And the trajectory will be upward in the stock, I think. You have the comp. I think you have the comp. Anything like that video I just played for you, we've got to be aware. That means that Apple might have a better strategy, at least for its ecosystem. Google has its own strategy for its ecosystem. I personally don't think the data centers are going anywhere, but who knows? People didn't think the big blue IBM computer was going to go anywhere either. But things take time. Things take time. And so I think we're going to, my opinion with Railtown, it will be bought out before the end of the summer. That is a very bold call. No one's told me that, by the way, but it just makes too much sense. So now we have a 26 ask. So the 25 ask is gone, at least for the time being. And, you know, an ask beginning with 25 is gone. It's 26 ask. We'll see. I don't think it's showing a turnaround yet, but I would expect it this week. Hello, Ward. It's 68 today, but it'll drop down to the 30s at night, 50s in the afternoon. Go really? Well, get rid of the mosquitoes. All right, let's try to go through, if it's come, let me go through Railtown first, and then let me finish with Nexbridge, and then we can talk about Railtown again. Okay. That is, all right. So it's not, It's not giving me Railtown yet. So let me just read to you Railtown. I thought I could show you the news. Instead, I'll start spreading the news. Headline: Railtown AI Technologies launches Rail Engine, a real-time event-based ingestion engine to power next-generation AI agents. Vancouver, British Columbia, January 26th, 2026. Railtown AI Technologies, Inc., CSE, Rail, OTCQB, RailF, Railtown, Railtown AI, or the company. A leader in AI developer tools and agentic frameworks is pleased to announce the launch of Rail Engine, its real-time, event-based ingestion engine. So they're pleased to announce the launch of Rail Engine, Railtown's real-time, event-based ingestion engine, a core component of the company's end-to-end AI agent development platform, or the platform. Rail Engine allows AI agents to ingest and act on streaming data in real time, advancing beyond traditional batch processing, sounds like LangChain, in order to deliver richer, context-aware insights and responses across complex enterprise environments. Combined with Railtown's Railtracks Agent Development Kit, ADK, and Conductor Agent Observability Tool, Railtown has produced a platform that enables developers to build, deploy, and manage intelligent AI agents at scale. RoadHouse. So he describes the three products. Rail Engine provides agents instant access to context-rich, searchable enterprise knowledge, enabling developers to launch advanced RAG, retrieval augmented generated, workflows. So they are enabling developers to launch advanced RAG workflows, automation, and agent runs while leveraging pre-built software as a solution data connectors for seamless integration, semantic research, and intelligent automation. The Railtracks ADK offers developers, so anyway, they have a website that you can go to, www.railengine.ai. The Railtracks ADK offers developers a Python native framework to design, orchestrate, and deploy autonomous AI agents with pre-built integrations, execution tracing, and orchestration tools that support real-world, multi-stage agent workflows. That website is www.railtracks.org. work. And then Conductor. Conductor is Railtown's observability tool, and it provides developers and operations teams with end-to-end visibility into agent behavior, performance metrics, resource utilization, and reasoning paths, enabling debugging, optimization, and secure, efficient deployments. That website, www.conductor, spelled without the vowel at the end. So it's CONDUCTR. And I'm such a bad speller. I assume that would be an O, but it very easily could be an E there. But it's not. It's CONDUCTR.ai. Quote, with this launch, Railtown delivers a complete agent development platform from real-time data ingestion through agent creation and observability, said Corey Brandolini, CEO of Railtown, founder of Brandolini Silk Ties from Italy. No. But there is a brand of ties called Brandolini. Quote, the platform equips developers with the tools to build agents that act on live data streams, while giving teams the insights and controls they need to operate with confidence. So the next headline is strategic integration with AI partnerships and Canadian sovereign AI ecosystem. Building on Railtown's acquisition of AI Partnerships Corp., the company expects to integrate the platform into the AI Partnerships global affiliate system, giving more than 180 AI solution provider affiliates access to Railtown's tools to rapidly build and deploy production-ready AI agents across industries. This integration will support Canadian sovereign computing and secure deployment, enabling affiliates and their customers to develop Canadian truly sovereign AI agents that meet stringent data residency, privacy, and compliance requirements while remaining fully controlled within Canada. Next headline, Canadian compute and hosting. The Railtown platform. This is starting to get into disclosure, my friends. This is starting to tell everything to anyone who cares to observe it. It is here. This might be all that needs to be disclosed. The Railtown platform, powered by TELUS's sovereign GPU infrastructure and Uniserve's hosting, you forgot about Uniserve, provides developers with a complete Canadian resident environment for agent development by leveraging high-performance Canadian infrastructure. Railtown enables affiliates and their customers to deploy truly sovereign AI agents that meet stringent data residency, privacy, and compliance requirements. In Canadian companies and developers is the next headline. In the combination of Railtown's agent development platform TELUS's sovereign GPU infrastructure, and Uniserve's Canadian hosting and managed services will provide developers across Canada an end-to-end Canadian sovereign AI agent development and deployment service. From data ingestion and agent design to secure compute, observability, and operational deployment. This ecosystem will support enterprise, government, and partner customers looking for secure, scalable, and sovereign AI solutions without reliance on foreign compute infrastructure. The launch and ecosystem, oh, I see how they're doing that. This launch and ecosystem enhance Railtown's ability to provide a scalable, production-ready foundation for industrial-grade agentic AI, unlocking broad access to innovative agent technologies while reinforcing Canada's leadership in secure AI infrastructure and innovation. About Railtown AI Technologies. Railtown AI Technologies, Inc. builds AI developer tools and agentic frameworks that power the next generation of intelligent application. Its platform, including real-time ingestion, Rail Engine, agent deployment frameworks, Railtrax ADK, and advanced observability, Conductor, without the vowel, helps teams build, deploy, and operate AI agents with confidence and at scale. This is powerful, guys. I think this is all they need. I don't know that for a fact, but I think that discloses everything they need to disclose. But we'll find out. The stock closed at 25.2 on 180,000 shares. And I guess we'll find out how it trades tomorrow. You're waiting on one research report, maybe, two research reports, maybe. But what you're really waiting on, give this, I don't know, give this to the end of the week and a couple investment committee meetings and a couple attorneys saying, all right, it's been 24 hours, been 48 hours, been 72 hours. You can put that standstill agreement in your drawer, start buying. It's going to be fun. I think it'll be fun. Let me see if there's any comments. Nope, no comments. I must have pissed everybody off. I have that effect on people. I have that effect on people. Okay, so I did that. I did 1, 2, 3, 4, 5, 6, 7, 8. Now I got to go 1, 2, 3, 4, 6, 7, 8, 9, 10. Okay, 10 more. 10 more. Okay, got it. I'm still, that picture I took of that still isn't showing up, so we'll get to it. I'll show it to you when it comes. I have about, I don't know, 15 of these to show you, maybe 20. So I'll be quick because now we're interested. If you're like me, I'm more interested in Railtown. But NextBridge is important. All right, as of September of 25, they had 700,000 of liquidity, cash and cash equivalents. They had a working capital deficit of 60 million and total assets of 2,123,000. Stockholders' equity deficit was a negative 60 million. Management believes that currently available resources may not provide sufficient funds to enable us to meet our financing and drilling obligations last year. This is the kind of thing Tony will point out to you down here, and or even continue as a going concern. I'll let Tony get into that because, you know, he's a much more efficient and much more stable due diligence guy. All right, the executives. This is it. You've got Gregory McCabe, 65. You've got Roger Wertel, 79, CFO. And you've got non-employee directors, Edward Pocock, the Toit, and Robert Lance Cook, 58 and 68. Let's just focus on Greg. Greg is the chair since 23, and served as the CEO since January 24. From March of 1988, he's owned his own company, McCabe Petroleum Corporation. And from April of 2013, he's owned and served as president of McCabe Ventures, a multifaceted private investment company, oil and gas, real estate, and other things. From 16 to 21, he served as the CEO of Torchlight Energy Resources. Mr. McCabe has an active ownership in several other oil and gas entities, and you can read them if you want. Working with geologist Rich Masterson, Mr. McCabe was extremely active in the early development of the Wolfbone play, major success in the industry, in the Delaware Basin portion of the Permian Basin. That experience and knowledge helped formulate Mr. McCabe and Mr. Masterson's theories regarding the Oro Grande Basin. In addition to McCabe's work in the Oro Grande and Delaware Basin of Texas and New Mexico, Mr. McCabe has explored for oil and gas throughout the United States, including Louisiana, Utah, Arizona, Montana, and Nebraska. Mr. McCabe has been involved in numerous oil and gas ventures throughout his career and has experience in technical evaluation, operations and acquisitions, and divestitures. He has a Bachelor's of Science degree in geology in 1984 from Sul Ross State University. You're going to notice guys like Greg, there's a drop-off from about the Reagan years, the early 80s, all the way till now. So all these old people have all the knowledge, and then you've got 40 years of chasing Wall Street, financialization. And so there's not the brain power ready to replace these guys as they go. And that's going to lead to powerful moves in oil and gas prices over the next 5, 10, 15 years, in my judgment. All right, transactions. Mr. McCabe is a significant shareholder. He holds almost 30% of the outstanding shares as of September 30, 2025. Where do those shares sit? At the transfer agent in the name of NextBridge. The McCabe contribution agreement. The company, MPC and Mr. McCabe, entered into a contribution agreement in 23. Mr. McCabe agreed to contribute to the company up to 100% of the interest held by MPC in the drilling project located in Vermilion Parish in Louisiana, the Bronco prospect, and up to 10% back-end working interest option for the Ora Grande project. With respect to the Bronco project, the combination is in proportion to the percentage of shares of common stock of the company that are directly registered in the name of the beneficial owner on the books and records of the company's transfer agent, whether previously registered directly or previously held through a bank, broker, or other nominee. All right, so the back end is interesting, but let's just move on from it because it's too complicated at the moment. And the costs. All right, Torchlight Energy Inc., now a subsidiary of the company, acquired from MPC a 66% working interest in approximately 12,000 acres in the Midland Basin. As part of that, Torchlight and Imperial Exploration entered into a participation agreement in 2016. And they retained a back-end after payout of 25%. That's a pretty standard third for a quarter, I think. On December 22nd, the company entered into a merger agreement. And anyway, they organized it all. I don't think it's worth reading about because they lost the Ora Grande anyway. And then they talk about the note again, talk about the note again, talk about the note again. And I put that there just to show you this is where you can learn. All right, pursuant to this agreement on the Johnson prospect, they had a right to drill additional locations. Effective December 24, the company issued 8 million shares of common stock to the participants in the Johnson project. Then each participant could elect to participate. The stock certificates were issued in 2025. And if they elected to participate, they'd have to exchange their interests. They did this Wildcat deal, which is the only thing alive right now, which let's read this. In March of 24, we entered into a contribution agreement with Wildcat Partners Special Purpose Vehicle, a Delaware LLC. Wildcat transferred 100% of the issued and outstanding membership interests in each of Wildcat Cowboy, Wildcat Packer, Wildcat Panther, and Wildcat Valentine. As consideration, we issued 2,500,000 shares of common stock. That sounds pretty good. MPC previously owned and sold to Wildcat the underlying oil and gas properties owned by Cowboy, Packer, Panther, and Valentine. MPC retained a 25% back-end after payout and various ORIs in the prospects owned by Cowboy, Packer, Panther, and Valentine. But MPC agreed to waive its back-end after payout, but retain its ORIs in all such prospects in an effort to facilitate the transaction. It's 3,800 gross acres, 3,600 net acres in Lafourche Parish, Louisiana. That's the Valentine leases. And the Panther, smaller, in Acadia Parish. Parker, 4,000 in Acadia and Lafourche Parish. And the Packer leases and Cowboy in Acadia Parish. Very hard to read. Concurrent with the closing of the above transaction with Wildcat, we entered into and closed a participation agreement with Magnetar Exploration, under which we sold to Magnetar 100% working interest entitled to not less than 75% net revenue interest in and to the Valentine leases, along with 100% right and title interest in all contracts affecting the Valentine leases under terms and conditions. Magnetar paid almost $1 million to Oryx Exploration, and resulting in net proceeds to us, I guess, of $600,000. Magnetar agrees to pay all delay rentals pertaining to the Valentine leases. Subject to deducts, basically. In the event Magnetar has not commenced actual drilling by August in 25, then Magnetar shall have the option to continue paying rentals or extending the leases within the AMI. We will have the option to participate for up to a third of a working interest, in other words, a third of the well, in the initial test well to be undertaken by Magnetar on lands covered by the Valentine leases. And anyway, they give the terms for signing up for that. Our authorized capital consists of 500 million shares and 50 million shares of preferred stock. The company was incorporated in August of 21. The company had 264,637 564 shares of common stock outstanding. And then they talk about the Series A, which does not have voting rights so far over the common, which is good. Which is good. I probably already read some of this to you. Yeah, I already read that to you. Darn it. I knew it. I didn't count right. I already read that to you. Let's not go through the notes. We already gave you enough information on the notes. This describes the deal with the spinoff. Again, McCabe bought all those obligations, so there's no remaining obligation to metamaterials. This is the same further description of the notes. Mezzanine equity. The company entered into and closed a transaction with Panther Bridge, $6 million. Series A. It ranks senior to company's common stock with respect to dividend rights. But I don't think it has supra voting rights. It bears an interest rate at 18%, which is pretty high. And it goes through August of 26. They paid off the 12% note held by Capco. None of the proceeds will be used for repayment of any debts owed to Mr. McCabe. They gave Panther Bridge 3 million shares of the preferred. The holders of the preferred stock have no voting rights, and the company can redeem it. But let's not get buried in all the terminology there. So they gave to Panther Bridge an assignment of a net profits interest, which is pretty good, and an irrevocable option to convert to a working interest. Under the assignment, the company conveyed an eighth, which is 12.5%, of the 8/8 net profits interest. Well, that's the net profits interest. That's pretty good. That's nice to them. These are the signatures: Greg McCabe, Richard Wertel, Ed Pocock, and Robert Cook. And let's see, what's this? The Oro Grande leases expired December 31, 24. There's only a little bit more here. Let me just see what it is. I may skip it. Yeah, let's just skip the rest. You can go to the filing, and you can content yourself with a whole lot of information. But my reaction to that prospectus is that we're really lucky to have Greg as the CEO, and to me, he's doing everything to make sure that the shareholders of NextBridge are not screwed any further than they already have been by the system. And he's not being greedy. I think he's maybe gone in too deep when you think about it, but he's put all his capital up. I don't know how much more he has, but he's put his 25 million and more to work, and probably more with the equity. But he isn't. I've dealt with people who put up their own money and they just screw the shareholders. He's not doing that, and so I think we're lucky with that. I also think he understands what the criminals are trying to do, but to the extent he used to talk to DD. This is where I get so upset when guys who either don't know what they're talking about or work for the shorts or some combination, when they talk to CEOs, you get scared that the CEO is going to make a mistake. I don't think that's going to happen here, but it's always a risk. We got to acknowledge it's always a risk. Yeah, I don't know what else to talk about NextBridge. Let's just talk a little bit about Rail Engine. Unfortunately, those pictures didn't come over. All right, let's go with what's here. PS 71. Hello, Sir Bill. Did you get my text a couple days? I don't know. Damn it. Maybe. I must have. I must have. I don't know. It's time to get a new phone number, get a new email. I get so much junk. So much junk. I don't know if I did, PS 71. I don't know if I did get your text. I don't see one, but I might be missing it. I don't see one. E. Belanger, Railtown has some warrants who's expired mid-Feb. Yeah, let me see if I can find that. We can go through that. Let me see if I can find it here first. And then I'll locate it. Because I've shown you that table. Just got to find it. So much stuff. So much. All right, here. Is that it? Now that was the. All right, that's what they exercised. All right, what's that? No, that's not it. Of course, I can't find it. All right, here. All right. Might be easy. It is easy. All right, I'll find it. Let me show you. Let me show you. Come on in if you'd like to see. The grand tour of what once was home, sweet home. Over there sits the chair where she used to bring the paper to me. And sit and tell me I love you, dear. All right, so here. So we've gone through January. The US 42s probably expired. That's 3.5. The US 21s, I don't know. Don't know about that. The Canuck ones, they probably went. I would bet, I don't know, those 30-cent ones there might not have been well, that's February anyway. So we're talking January. Basically, we're talking 3.5 million that probably did not, and maybe as much as 4 million that did not get exercised. And then, all right, that's March. Here's February. This is options, February 9th. I don't know. Oh, no, that's 28. That's 28. So it looks like maybe 4 million shares reduce. We might have a fully diluted number now at around 210 million instead of 200. When I started doing the calculations, it was close to 224 million. It's a big change. It's going in the wrong direction for the bad guys. Crabby Ellie. What if Railtown can't keep up with competition, whether private, public, or government? I don't know. To me, this company just feels risky and unsettling. Well, you probably don't know the story. It's not trying to keep up with government. Look, the key thing is it's in Canada. So it's working. Canada, the government, the provinces, the think tanks, the universities, the bankers, they're all working collectively for this idea of sovereign AI in Canada. So they're not competing with the government. A public company, you might argue they're competing with is Google ADK. Private company they're competing with probably is LangChain. But Google, I don't know how to break out the value of Google ADK, but Google, as you may well imagine, is a massive company. And it's unlikely that the Google ADK is on the books of Google at a $50 million valuation. It's just unlikely as all get out. But that's Google's solution to that orchestration framework layer, for lack of a better name, that goes on top of the language models and then on top of the data center, basically. So Google, may have their own solution, but then Microsoft doesn't have that layer. Amazon doesn't have that layer. Amazon might have a pretty good arrangement with LangChain, but on the other hand, it might just be one of many. We don't know. But Railtown is, by announcement, and the announcement today nails it down. Railtown is going to be, for lack of better English, on top of the Thales Sovereign AI Factory. And we know from previous announcements and interviews that at least 100 million of, it says over 100 million, of current money spent by the network companies on hyperscale services elsewhere is going to be moved to that data center. We don't know the exact payout, but I assume it's not 10 or 15%. It might be 25, 30, 35%, but I don't know. That sounds a little high. So I use 20%, but we don't know. But if you use 20% at a little bit over 100,000, you're talking about 2 million a month coming into the company from current spending that they control. They can move it over, and it's 100% or almost 100% payout. There's not a lot of risk there. So you obviously don't know the story. But anyway, Krabby Ellie, they have to work at warp speed to stay up with the competition because everybody is talking about AI now. Yeah, but AI is a big canvas. There's a lot of different aspects to AI. I think your concern is why I believe the company, one, will be sold earlier than everyone expects, because you're right, to keep up with NVIDIA's ability to spend and deploy software people, or Microsoft's or Facebook's or IBM's or Oracle's or Tesla's or Amazon's, Apple's. It probably doesn't make sense for Railtown to be a unicorn, because others could blow by them. So the best thing is prove your concept, prove your technology, and sell yourself. That's why I think it'll happen very quickly. Secondly, the buyers, believe it or not, they don't want to start from scratch. It takes time, it takes making mistakes, and it takes money. And you'd think they have more money than Croesus, but they have priorities. It's like in any life, when you dedicate resources, you get 80% of the return roughly out of 20% of the effort, of the money, of the resources. So a big company looks at that and they say, well, let's put it here at this 20%, and the rest we'll just buy. And that's, I think, as Railtown sits on top of the data center, proves that it is the key interface between users and the tremendous user experience people will pay for, and the data center. I think for two reasons. One, to bring the revenue in-house. For example, TELUS, if I'm right about 20%, one way to increase revenue by 20%, just go buy Railtown. Or Microsoft, who is the largest, as I understand it, the largest data center provider, hyperscaler in Canada. If they don't want to lose their position, they got to come up with ironclad legal framework that keeps the data in Canada, but also they want to buy Railtown, a Canadian solution. Or if you're, you can make up a number of scenarios. Maybe you're IBM, or maybe you're NVIDIA, or maybe you're Amazon, and you want to buy it. We don't know where it's going to go, but I think there will be an effort to buy Railtown early, to block out the competition, and also to increase revenues and to own that space. Microsoft's a perfect example. If Microsoft spent $40 billion, and I know that's insane, but if Microsoft spent $40 billion in stock to buy Railtown, and I know it's just completely out at Planet 9. Microsoft owns something like 400 data centers worldwide, something like that. So they could bundle Railtown in the software services they supply, and they could create the internal valuation of Railtown from the revenues that they bundle it in with, that maybe is 400. I hope I said 40 billion, not trillion. 40 billion, but they could make it 400 billion just by bundling it all in across the world. Microsoft remains the world's 95% of the world's software tools come from Microsoft. I don't know if that's it. Maybe it overlaps, but they're it. And Railtown is in 3 of the Microsoft channels. Railtown had an early and strong relationship with Microsoft, still does. And obviously, if Microsoft sees a pickup in the revenue, because they're already, I don't know if you say Railtown is bundled with Microsoft software products now, or Microsoft is bundled with Railtown's, whatever. If they see a pickup in revenue, I believe Microsoft acts and buys Railtown. So I think your worries are just because you don't know the story. So that's all. I'll admit I don't know much about this company, so I'll need some time. Take all the time you want. By the time you buy it, it'll be $1, but that's fine. At least you'll know it by then. Ward Richardson. William, RT's rail engine is the standout component for data centers. I agree with you. As a real-time event-based ingestion engine, which streams enterprise data. I'm sure Jensen has his eye on this now. Remember, well, there you go. See, you get it. It's efficient software. You don't want to be on top. You don't want to be a user. Let's say, just for sake of argument, one of the cities who buys the Tesla taxi cabs, and it's near, they use this new NVIDIA HPE software stack in the TELUS Sovereign AI factory. They use this one, which apparently is much more efficient because of NVIDIA and HPE, but also because of the river that runs through it, they have cheaper electricity. So the last thing you want to do is sign up for that as a user that directs taxi cabs all over the place. Although my understanding is Tesla uses a completely different model with cameras and satellites. But just for the sake of the argument, let's say they use an ingestion engine like Railtown's. Well, they don't want those engines spinning and duplicating and getting lost in software loops and duplicating too much. I mean, it's good to have backups, but they don't want it to go into overkill in processing power. So yeah, it's all about efficiency. It's all about keeping the cost per token, I guess is the measurement, keeping those costs down. So you're exactly right. It's pretty exciting. All right, it's 4:50. I don't know what else to tell you guys. I think it was good news today on NextBridge, good news on Railtown, and looks like Trump's pulling the troops out of Minnesota. So we'll leave that to the institutions there. It's got to be good, right? Just got to go with what feels good. Border Patrol is out of Minneapolis. So anyway. Michael Burry bought a stock. Grandpa bought a rubber. He bought GameStop. Michael Burry bought GameStop. It's up 7% at $25. So I guess you have to go. You got to go for Tony for that one. It looks like he's going to be right on GameStop. Novak Djokovic got through to the quarterfinals with a little bit of luck, but he's got to play Musetti, who is out for him. Wonder if they predict. Here they predict. Let's see what Sports Illustrated predicts. Lorenzo Musetti dropped just 3 sets through the 4 rounds, needing 4 sets in the opener and a 5-set thriller in Manila. Novak Djokovic has yet to lose a set this tournament, although he didn't need to play the last round as his opponent withdrew. Still, Djokovic only lost 7 games in each of his first 2 matches and then 13 in his third round. Djokovic has won 9 of 10 head-to-head matches against Musetti, but Musetti's young. He's 23, including the Athens final last year. Oh, gosh. So the odds are prediction and pick. Djokovic should be able to win and advance to the semifinals yet again, but this price is too high to simply take the money line. All right. I just want him to win. Musetti took 1 set against Djokovic in their last meeting, losing the other set 6-4 and then 7-5 on hard court. There were a total of 31 games in a best-of-3 match, so a best-of-5 match should easily get into the 40s. Djokovic has yet to be really tested in this tournament. This should be a good matchup with Musetti giving Djokovic all he has. Yeah, he's almost more dangerous than Sinner, because then he's got to beat Musetti, then he's got to beat Sinner, who I think somebody cheated on his behalf, I think. But anyway, let's leave that aside. Then he's got to beat Alcaraz. He's got 3 tough matches ahead if he keeps going. All right. I guess that's all I have. I still can't read part of what I wrote down here. That's what I wrote down. Momentum or investing. So I wanted to, I won't lecture you, but when, I might have already mentioned it, but when people give you advice, if they are momentum players, traders, that's a little different than what I think we're trying to do. And yes, in Railtown, it looks like we were early, but we're in. And that's what, when you're investing and you're not chasing every momentum play out there, I think we bring some of the odds in our favor by doing so. So I think I'll leave it at that. It's 5 o'clock. Let's see where everything closed, including some of the after hours trading. I can't. It's signed out. I'm not going to waste your time signing back in. So anyway, I wish everyone warmth, peace, and hello from your puppy dogs and cats and horses and everybody else. And we'll talk tomorrow, I'm sure. So peace out.